Hello, everybody, and welcome to today's event, Insuring the Net Zero Transition. I'm Sonia Gibbs, Managing Director, Head of Sustainable Finance for the IIF, and thank you so much for joining us. This is actually the last one in our series of IIF COP Talks for the year. We have covered a wide range of topics, including sustainable transportation, climate resilient infrastructure, all the way to financing a just and equitable transition. And that was, of course, very central to the discussions in Sharm el-Sheikh at COP27 earlier this month. So the recordings are all available on our website. Feel free to check them out if you missed any. So today's topic, the insurance industry has such an important role to play in accelerating the energy transition, mitigation, adaptation, as well as insuring against climate and environmental risks, both physical and transition risk. And we have a wonderful panel today to help us understand how the insurance industry is evolving. And so I'm delighted to introduce our session moderator, Isabel Santanac. Isabel is Global Insurance Leader for EY and a real proponent of the positive impact insurers can have in supporting transition. Isabel, welcome, and over to you.
Thank you very much, Sonia. So COP27 ended a few days ago. In 2021, COP26 in Glasgow drained a lot of excitement and commitment from governments and private sectors around net zero transition. The financial services industry was under significant pressure to be more active on the transition. The Glasgow Financial Alliance for Net Zero was created, which has now 550 members, and the Net Zero Insurance Alliance was also officially launched. This was a recognition that the insurance industry has a fundamental role to play. Beyond the risk transfer mechanism, the insurance industry can help shifting from crisis reaction towards education, risk management, and prevention. If I look back on what happened since COP26, there has been initiatives, but certainly not enough. What is probably the most visible is the announcement by many insurers or insurers over the last few months that they will limit their risk on natural catastrophe, leading to an increased protection gap. COP27, which was maybe less advertised than COP26, had very interesting outcome. It first reassessed the absolute imperative to limit global warming by 1.5 degrees. It recognized the need to have a just transition, so a transition done in a fair way, not leaving anyone behind. It agreed to provide loss and damage funding for vulnerable countries hit hard by climate disasters. And several initiatives are taken for funding the climate finance gap. So how the insurance industry can accelerate their actions and increase their role in this agenda? That is what we are going to discuss today in this impressive panel. I will introduce quickly our guest. Francis Bouchard, Managing Director of Climate at Marsh McLennan. Gordon Ferguson, Vice President, Risk and Insurance at BP. Dominic O'Ware, Group Chief Underwriting Officer at Munich Re Syndicate. Nick Holder, Chief Operating Officer at Prudentials Africa. And Peter Manchester, the EMEA Insurance Leader at EY. So let's move to the first question. In the executive opinion survey conducted by the World Economic Forum, environmental issues feature significantly lower as a top 5 risk for G20 countries in this year's report compared to last year. In the meantime, COP27 stressed in their summary that the current economic and geopolitical situation should not be used as a pretext to deprioritize climate actions. So it seems that we see here the conflict between the short-term priorities and the long-term objectives. Francis, my first question for you. What is the insurance industry needs to do to maintain a sharp focus on building a more sustainable, more affordable, and more secure energy system and economy in general, even if the current geopolitical and economically challenging environment?
Thank you, Isabel, and thank you, Sonia, for assembling this discussion. It's an important one. And Isabel, I think you touched on the complexity of all this. And I think if anything, if nothing else, the last 6 months to a year have kind of shown us or exposed the true complexity of the transition that we're facing. This isn't simply an exercise of amassing enough investment capital. This is really about realigning geopolitical alliances, dependencies, and other complexities. So I do think the additional or enhanced clarity around some of the challenges we face, have slowed things down in the short term, and have really forced all stakeholders to reassess kind of how we're actually going to achieve these important goals, considering the complexity of the situation. I think from an insurer perspective, Isabel, you use the right word, and that is focus. And I think there's so much that we can still bring to the challenges that are out there, because so many of them are risk-based, not just geopolitically risk-based, but perhaps more traditionally financial and operational risk-based. If you look at some of the areas where we can really help our clients and the real economy companies really make this transition, you can start with supply chain as an example. And I don't just mean helping them understand the decarbonization needs of their respective supply chain providers. There are new models emerging around circularity and different approaches to aligning sectors. There are new awareness of kind of exposures, whether it's extreme heat. You see a lot of reports now on the impact of extreme heat, which is kind of been a hidden exposure, but on supply chains, in particular in the agriculture and construction and other outdoor sectors. You think about the catastrophe exposures that suppliers may provide. You think about the use of microinsurance that's emerging in supply chains. There's an entire area of de-risking supply chains from a decarbonization transition perspective that I think insurers have a role to play, and we really need to kind of create that longer, deeper understanding, so we can use the economic model, the supply chain, and the power of that supply chain to really accelerate change. But what you hear probably most often is really the work the insurance sector can and should be doing to support some of the new technologies that are really going to facilitate. And if you kind of go below the sector and you start to look at some of the common technologies that'll be used to decarbonize across, carbon capture and sequestration pops up as one. And, that's an area where I think there's still a lot of uncertainty about the risk exposures associated with CCUS, and as well as the long-term liabilities that will be held. So again, I think there's an insurance industry role to help clarify and advance, frameworks that work for all players. The decommissioning of some of the legacy energy utilities and mines and whatnot. I mean, those are products as well that I think insurance and finance can come together and really help facilitate the decommissioning of some of these legacy institutions. We could go down the list in terms of areas where the insurance sector can continue to play a role, and that's electrification of buildings. We can look at, the emerging focus on nature in the TNFD that's about to emerge. So, Isabel, there's really no shortage in terms of the role of the insurance sector in de-risking this transition. And we haven't even touched on, the role we can play in adaptation and really helping communities through this as well. And hopefully we can touch on that later.
Yeah, certainly. Thank you, Francis. So a lot to do. Nick, maybe a question for you with the more life and health angle. How is the shift towards more challenging economic environment changing your sustainable strategy at Pru?
Hey, Isabel. Thank you very much for the question. Great to be here. Thank you for inviting me. We all know, of course, 2022 hasn't been an easy year for many businesses. We're still suffering from the after effects of COVID. We all know about the sort of macro political situation and recent economic challenges as well. And that all has ripple-on effects that affect our sector and our markets. I don't see, however, any move by Prudentials executive or board, or indeed within the individual businesses that we operate in Asia or Africa, to move away from our stated climate transition objectives, our ESG objectives. That's just not part of our thinking at the moment. There's an incredible momentum at the moment around climate change and addressing climate change. And I think the whole purpose of insurance is to be there when times are tough. That's when they're needed. And our role is to help build resilience into the lives of our customers, of their communities, and the wider economy. And I really felt, I saw this when I was at COP in Sharm el Sheikh. There were a lot of initiatives that were private sector driven, and they didn't provide any sense of slowing down or stopping. In fact, I left with a huge sense of the momentum building from that COP, notwithstanding some of the press reports that we've seen. Certainly the chief executive of Prudential are continuing to push our group ESG strategy. We're really keen at Prudential to support the issue of financing a just and fair transition. And there are other factors as well that will ensure we continue to focus on ESG. As insurers, as life insurers, we really do invest in the long term. Without sustainability, there is no long term. We've set ourselves medium and long term goals for the sustainability of our investment portfolio. That's going to continue. Secondly, I'd really highlight the importance of regulatory and reporting requirements. They're only going to grow. Sonia and I attended a number of events together in Sharm el Sheikh that were led by Ravi Menon, who's the chief executive of the MAS, the Singapore regulator. That's just a sign of things to come. Regulators are not going to let us move away from doing this. It's critical for all of us, and the regulators aren't going to make us forget or let us forget. Thank you.
Thank you, Nick. Peter, what do you see as the biggest obstacles to overcome in ensuring the net zero transition?
Thanks, Isabel, and good afternoon, everyone. Yeah, no, definitely it's a challenging task for the sector, and I guess most importantly, a sort of evolving one. But I think, echoing Francis's point, I think there's a real recognition that of the central role that insurers are going to play in the sort of full cycle of sort of carbon management. I think for me, there's sort of three areas of challenge and perhaps also opportunity for the sector. So firstly, how you decarbonize the underwriting portfolio. I think that's traditionally focused now more on the sort of brown industries, more carbon intensive. But I think it's the key is how you strike the right balance between maybe exclusionary policies in some cases, but then more engagement and positive support to help manage the transition and manage the risk, whether that's through sort of increased data, whether it's through tooling, whether it's through innovation in covers and policies. And I think that's very much aligned to the broader commitment from the Net Zero Alliance, but equally, Lloyd's of London came out and set a net zero target for 2050, including underwriting portfolio. So decarbonisation in the underwriting portfolio important. I think secondly is around product innovation. Really sort of creating those services and offerings to assist in transition. And I think an increasing recognition in the sector that the sort of historical claims data does not really, is increasingly becoming difficult to predict the future in terms of extreme weather events or sort of new low carbon and offsetting technology. So if you took something like, hydrocarbon capture and storage, whether it's offshore wind farms, whether it's sort of more the new and complex risks, I think it requires a different underwriting stance, potentially a different set of products and services, and maybe a more integrated view of risk management, risk transfer and coverage. And then finally, which I think is probably the most central, is around green infrastructure investment. I think it's pretty clear that this is going to be critical to net zero transition. And we see an increase in the number of project portfolios, but perhaps there are gaps in insurance coverage. Why is that? I think because the industry has historically tended to look more on a sort of product basis rather than perhaps a sector basis. And if you look at some of the requirements around green infrastructure, it will encompass things such as battery storage, solar power, real estate, construction, etc. And therefore, the extent to which you can perhaps look more at a sector perspective rather than an individual product basis to create a more sort of holistic offering, and maybe even move as far as towards more evergreen rather than annual covers. And then finally, perhaps what we've seen is an explosion in the use of captives, particularly around more of the insurable risk. And I think it's how the insurance sector works with the captives to create the sort of layers of protection that is going to enable a faster transition through the cycle.
Thank you, Peter. Gordon, you will give your point of view from an oil and gas company, which is interesting. So what do you need, what do you think we need to scale up many innovation energy transition projects, and what are the roadblocks to more effective collaboration across the value chain?
Thanks, Isabel. And I guess I'm the problem and the solution to some extent. And while we're seen as an oil and gas company, we also want to be seen as that integrated energy company, as that's where we're transitioning to. But no, I just picking up on a number of themes from others that I've already heard on the call today. I think you know, there's quite a number of parts here for me. The first one is, I think, you know, given that we are greening and we are transitioning from an integrated, from an international oil company to an integrated energy company, we need that support for the hydrocarbon piece from the insurance industry in order to fund and support the transition into the renewable space. And, you know, in that regard, we need to make sure that we don't pull away the umbrella when it's raining, if you like. And there's a key piece here that we want to make sure that there's rational, and we absolutely support the removal of some of the insurance areas from, you know, the what we would see as the higher risk or less or the browner part of the portfolio. We just want to make sure there is still the support for some key parts of the operations, because they will fund, as I say, that transition. But with regards to the scaling up of innovative transition projects, I think for me, I would describe it as being a question of desire and incentive. And in that regard, I think on the desire piece, we all want to get to the right place. We all need to see the end point as being the goal and work together on that. There's no them or us on this. We're all working together, and we all have our part to play, would be the first thing I would say. And so in regards of that, I think there's information sharing. I think we can help with regards to what we learn from the new technology, what we learn from our part in the overall picture, and sharing that broadly, I think is going to be critical. And then I think there are some other parts, you know, we want to think about how do we encourage people into the future. So I think these concepts of build back better are also useful as well, that, you know, when we have the opportunity to electrify, remove, you know, the gas provision of energy into things like our offshore platforms, these sort of things, these are the sort of things we need to be thinking about. So, you know, for me, I pick up on some of the other points that were made. I think, you know, traditional thinking won't get us to where we're trying to get to. So this sort of traditional offshore, onshore, upstream wells protection, and I really picked up on what Peter was talking about with regards to, you know, that sort of, we need to think about sector as opposed to individual. When I think about carbon capture and storage, for example, in the Teesside piece, we can't deal with an onshore part of the risk and an offshore part of the risk and a well part of the risk. We have to deal with the whole part of the risk and look at it as one and be collective in this as well. So from my perspective, I think, Isabel, I would summarize by saying, you know, stay with us on the hydrocarbon. Let's not lose that, because that will then help to fund the innovative transition. Then let's embrace that desire to get to the same end goal. And through incentivizing by, you know, data sharing and all these other things, I really think we're going to get there. And it is that sort of collaborative team effort, and the them being stronger than the us being stronger than the individual parts.
Thank you, Gordon. Dominic, would you echo then the fact that the insurers and reinsurers have a more active role on those energy transition projects?
Absolutely, and I think there's a lot of issues that I'm picking up in this conference already this afternoon. I think one of the problems in the insurance sector is it's not quite sure it should be a disabler or an enabler when it comes to the transition. The power of the activists, shareholders, protecting the share price is such that many insurers are being pushed into a disabled position rather than enabled position. And I think this is wrong. It echoes Gordon's words about, frankly, if you're not supporting big oil in making this transition, you're not supporting the transition, because it's big oil that's making. Big oil have the experience of these projects, big oil have the capital, the expertise. And if you look at some of the statements in their strategy, it's immense. However, to go back to my original point, at times we're pushed into making decisions that are not supporting that transition because of activism, NGOs, etc. And I find that rather frustrating. And we ourselves have found ourselves in that position quite recently. Just to demonstrate it, I saw some commentary about COP, how, I forget the exact number, something like there were 21 oil companies represented there. And the commentator was saying, why are there any oil companies represented there? And that's completely missing the point, because that is what's going to enable the transition. From an insurance point of view, we've got a lot to play here. We can really, insurance is the sort of oil in the global machine. Without insurance, things do not happen. We've seen that more recently in the Russian invasion of Ukraine and the grain shipments and sanctions, a lot of which insurance is the underpin for all that. And so can insurance be for that road towards sustainability. The problem we have at the moment is, I think, lack of expertise. And I think echoing someone else's point about we're still trying to sell old products to give solutions to new problems, and that's not right. A lot of the so-called renewable underwriting expertise that's in the London insurance market is oil and gas underwriters who cross out the word oil and gas, put renewables, and get a 30% pay rise. There's not enough expertise out there at the moment. And without that expertise, we're probably going to be on a hiding for nothing. So we've got to become expert. We've got to listen to that client base. We've got to some extent, disable, but more importantly, enable. Because without insurance, these things will not happen. And we have a collective responsibility to deliver on that one. But it will require expertise, because without expertise and the corresponding return on capital, the capital won't be attracted in the first place. And that's our dilemma at the moment.
Thank you. If I'm hearing all of you, it's clear that it's quite a complex topic, as Francis mentioned up front. But that is also, an area where insurers need to think bigger and differently, and certainly look for collaborations with other sectors, governments, and peers to really try to innovate and find solutions. Obviously, it's not the insurance industry only problem or problem to solve in isolation. So, Francis, what do you see as the key next steps for insurers and reinsurers to take as enablers of the energy transition? And did you find any interesting initiatives coming from COP27 on this topic?
Thank you, Isabel. I mean, I think there was actually quite profound progress, perhaps not on the mitigation and the decarbonization front, but certainly on the adaptation front. And it's a bit bittersweet, because I think the urgency and the renewed energy being focused on adaptation is a reflection of growing realization that 1.5 is going to be tougher and tougher and tougher to meet, which means there's more and more consequences for human beings and economies that are exposed to climate exposure. So it is a bit bittersweet, but the you mentioned at the outset, Isabel, the loss and damage discussion that was happening in the negotiating room really spilled out over into the blue zone and elsewhere in terms of really almost setting a tone of discussion. And you think about loss and damage. I'm not suggesting the insurance industry has all the solutions here, but we certainly are well equipped to understand what loss and damage is about. And I think we probably have a role to play in providing some type of knowledge and analytics into that framework that's going to be developed over the next year. In parallel to that, the other announcement that we were really focusing on was around the global shield, the G7, V20 type of global shield, which is really an acknowledgement that adaptation is going to require dramatically more money. And it's going to require dramatically more involvement from the insurance sector. So once again, we are emerging as part of the answer not part of the problem, as we tend to be viewed in some cases. And that really led to, and I think sometimes it's better to be lucky than good, but the timing of this was wonderful, and that there was also a recognition within the high-level champions and the race to resilience that the insurance sector has a role to play. So we were expressly referenced in the Sharm el-Sheikh adaptation agenda. For those of you who haven't seen it, it's out there. There are 30 initiatives that the high-level champions in the COP27 presidency have endorsed. And one of those is really a call to the insurance sector to articulate a framework around what it can bring to the adaptation challenge, get more involved in individual projects that are out there advancing adaptation, and to really find a way to institutionalize a way to scale our impact in helping communities and economies make that shift to a more protected state. How can we actually help communities prepare themselves for the physical ravages that we know are going to come from climate change? So Isabel, we were quite encouraged by the focus and kind of the approaches and that are all advancing in a similar direction on the adaptation issue, because I don't think there's another sector out there in the world that has as much to gain or lose from the success or failure on the adaptation front than the insurance sector.
And I will add also to what you said, Francis, the call from COP27 to have better education in order that people can change their lifestyles, which is something I'm a strong believer the insurance industry is very well placed to do. Peter, the pandemic has shown the limits of the public and private partnership and collaboration. On ESG, why do you think it's difficult to make progress on that?
Thanks, Isabel. Yeah, I mean, I think, look, this is an issue of real fundamental importance, and I think you highlighted the protection gap earlier, difference between economic and insured loss, and that's grown to something like $1.24 trillion, primarily driven by some of the newer risks around cyber, shifting weather, climate, etc. So, how do you deal with that sort of expansion in uninsurability? Now, I think actually the sector is very well placed. I mean, it has a long history of collaboration, of working with government organisations and non-government organisations to really improve, societal resilience to major risks, and manage to mechanisms to, manage peak risk, whether it's, flood re or pool re in the UK, aspects in the Netherlands as well. And indeed, and if you look at the pandemic, which was, a shock to the economy and financial system, you saw sort of new public-private partnership models being developed to enable perhaps more short-term support to specific commercial lines like trade finance, for example, trade credit, work with a government backstop, and film and TV restart schemes. So the mechanisms are there, and I think they do provide perhaps a template as we look at sort of more broader events. So I do believe, there are challenges with it, but I think there's probably two critical areas for engagement with government and the sort of NGO groupings. Firstly, risk financing. So how can you engage around risk financing for critical public infrastructure, or perhaps more innovative catastrophe risk pools? I think there are good examples in Africa with ARC, which is providing capacity and contingency plans for climate and drought. I think secondly, similar to the pandemic, how do you create greater risk pooling for more systemic risks such as pandemic or other black swan events? And I think that the heart of it is around engagement. I think what the insurance sector holds is a huge amount of risk data and information, and I think there's a risk and information exchange that can occur with government bodies. I think there probably needs to be more alignment with some of the regulatory development to underpin that and reinforce it, and maybe the option to start to work out almost like sort of pre-agreed insurance and risk finance solutions that can be sort of scaled up when needed. So I think some real points of perhaps engagement and debates across the sector and with the sort of broader economic partners.
Thank you, Peter. Gordon, clearly the energy transition is an area where you would expect governments to play a significant role with private partners. So do you see greater use of public-private partnership going forward, and under which format do you see that?
Yeah, great question, and we're seeing it in various different formats at the moment. I think would be the answer to that one. And I really liked, some of the comments before, actually, from some of the other presenters there. I really liked the risk and info exchange that Peter talked about, and then he talked about this pre-agreed risk and finance arrangements. I think that's all got a part to play, because all parts need to come together on this. And we welcome, for example, the pressure that we get from NGOs to make sure that we're going fast enough, that we're meeting the shareholders' needs, but at the same time meeting the societal needs. And at the moment, that's a real balance between provision of energy security and at the same time moving towards that transition to zero carbon and the renewable piece of our business. And that's significant. So I think the government have a part to play. We have a part to play, and when I look at the government's part, I think what's interesting is what we really need is the simplest solutions we possibly can. And I compare, for example, in the US at the moment, we're looking at carbon capture, and there's tax incentives to move to support the carbon capture position over here. In the UK, interestingly, there's a little bit, it's a bit more complex with regards to capped losses and how can we make the private sector protected and whole, and et cetera. So I think there's an opportunity to simplify here and to get really clear on the common goal and the objective, less red tape. Again, I look at some of the processes it takes to put in place facilities, renewable facilities, can take an inordinate amount of time, and potential to lessen that red tape and move to potentially also sort of supported offtake and pricing arrangements. These types of things will help bring the public and private sector together into a partnership. And yeah, in terms of going forward, I think it's about sharing the risk and making sure that no one party is exposed, either on the public or the private sector, and working mutually and collaboratively towards that goal. And again, I really liked what Peter was talking about with regards to sharing that risk information, sharing that the way that we go about the mitigation of that risk. I think is going to be important as it's all quite new and nascent.
Thank you, Gordon. Nick, COP27 brought a sharp focus on the role of the private finance community in closing the climate finance gap, and doing so, as I was mentioning, in a fair and inclusive way. Partnerships between public and private finance were much discussed. And how are you working with partners around the world to support countries' transition to more climate resilient economies?
Thank you, Isabel. Just a warning, I'm afraid here in Nairobi the internet's a bit unstable, so I hope I don't cut out as I answer. Obviously, partnerships incredibly important for any business, but particularly for a business like life insurance, which is really thinking about very long-term time horizons. Now, what areas came out of COP27 as perhaps areas to really focus on in terms of building partnerships? Well, I saw a couple of things that were really prominent during the conference. The first was around the right of governments, particularly governments from emerging market or the global south, to be part of the conversations, drafting policies, setting green regulations, setting standards, building partnerships that are really relevant for the sort of markets they operate in, and they're the sort of markets that Prudential operate in both Africa and Asia. And the second piece, there was a very strong emphasis on the role of institutional investors like insurers, helping emerging markets to develop and deepen their capital markets, and these in turn can then finance their ambitious net zero targets. Governments are always a really key stakeholder for us in the life insurance industry. We try and take the lead from them around their domestic policy agendas. And of course, more and more countries who are present at COB are taking ESG seriously, are taking climate transition seriously. So as they move that up their agenda, we will inevitably follow. And what we will do is work as insurance companies do everywhere in terms of deepening their capital markets. I think the second area of partners that really came across during the COP conversations, particularly for the countries that we operate in, were around the roles of the multilateral development banks, the national finance companies, how they can work with the private sector to really multiply and expand the amount of capital available for investment in climate transition. I think that's going to be a really exciting space, particularly if they can free up some of their rules and regulations that will allow them to cooperate with insurers and other financial institutions to multiply the amount of capital available for climate transition.
Thank you, Nick. And Dominic, finally on this topic, how do you see your company or the industry more broadly playing a critical role on PPP?
Well, I think absolutely the industry has a critical role. But I'm not quite sure we actually recognize it yet. It goes back to my earlier point. We haven't really sort of invested in the appropriate resource. We've heard a lot about data already this session. I think we have a lot of data. We are not using it in very clever fashion. So the industry does need to collaborate. It does need to sort of put together appropriate facilities that can deliver capacity to our customers. But I think also it needs to listen to our customers. And I think this has always been a challenge, and particularly in ensuring the transition. Often we only get involved quite late in the day when some of these bigger projects or some of these concerns. And as a result, we tend to react in a rather traditional way. And as I said earlier, we just try and sort of sell old products to try and resolve new problems. And I think we need to think it more holistically, and we need to think much earlier in the process, so we can really understand what the problems are. We can bring in the appropriate resource. We can really understand the risk, and we can provide a fairly priced risk transfer solution that's fit for purpose. But we do have to move away from our traditional thinking that it's all about physical loss, physical damage, or something like that. We need to actually look at what's required. It's energy retrofits and guaranteeing the results there. We're going to think differently. I just don't think we're actually there yet as an industry. We're still just trying to adapt by taking old skill sets and applying to new problems, as I said. So the industry is vital, but I think there's a lot we need to do. We need to skill up. We also need to bring in sort of new thinking. Again, it goes back to the thing, we're recycling old talent. We need to bring in new talent. I'm not talking about sort of engineers. I'm just talking about sort of very, very bright people who really sort of are passionate and understand these issues, who can actually interlock with our client base in an intelligent and informed manner. And then as a result, we can construct things that are of use. But I think we are a little bit behind the curve at the moment. I find that quite frustrating as an industry. If you look at, I work in the London insurance market, which is essentially the home for specialty insurance. And we were the market that first delivered arguably cyber or directors and officers liability or satellite insurance, or even the early days of the North Sea. But where are we when it comes to renewables or green energy? We're not there. We've missed a trick. And I think that's because we've been looking backwards and not forwards.
So Dominic, sorry, it's a very good transition to the next topic. And I like when you say that we try to use old products to solve new problems. And clearly that is the purpose of innovation in the industry. And how does the industry can create and propose products that incentivize their customers to behave more environmentally friendly? Which seems to be quite a challenge, and sometimes in those discussions come back the problem of pricing, and how can you have an incentivized pricing if the risk that you insure stays the same? So a lot of reflections, some initiatives, but I'm hearing I'm hearing from you that you believe we could do more. So Francis, again, the first question for you, what type of new sustainable products do you see emerging with longer term value and greater resilience?
Yeah, thank you, Isabel and Dominic. Thanks for teeing this up. And I think I certainly, and I suspect all of us on this panel share the frustration that we haven't kind of captured this moment in terms of everything that the industry has to provide. Now, Isabel, I think, on the consumer side, we're seeing some innovation around the usage-based insurance. We're seeing, insurers starting to catch up to smart homes and the role of that. But, I think what I have found to be as, if not more interesting is it's not so much the new products, but the new models. So, in preparation for this COP, we worked, Marsh McLennan worked with the UN Race to Resilience and the High Level Champions team to develop a little report where we went around the world and looked at different innovative approaches that insurance sector players were taking to advancing the adaptation element of this, right? And a few, they're wonderful examples, all 17 of them are, but there were a few that were really more about models and new approaches to actually managing exposure and risk. And 3 of them in particular, I think are worth citing here. One is this whole move towards anticipatory finance. So there are examples out there in the market where insurers are putting money in the hands of at-risk individuals before they're harmed, which gives them the opportunity to then use that money to avoid the harm, to take their family or their cattle or whatever economic assets they may want to provide or protect out of harm's way. I think that's a profound shift earlier into the value stream that insurance has a lot to provide for. It's been said several times here, our products typically wait until there's a harm and then we compensate. And we have so much risk analytics and data and understanding that we can move that up and create immense value. The other fascinating new model that we saw emerging here, when you think about, let's say, a parametric product, and I think everybody here kind of understands what that is, we tend to view insurance as kind of the sole source of capital. But there are a number of fascinating conversations going on out there about using a common parametric continuum, shall we say, and then stacking different forms of capital that have different return expectations along that continuum. So insurance is actually part of a series of capital sources to manage an exposure and a risk, not just the only one. That is, if that mechanism can be perfected, that can be used across multiple exposures, and it's really a fascinating combination of type of capital. And the last one I'd cite is community-based catastrophe insurance, where trying to leverage some of the economic and administrative efficiencies of group insurance, but bring that to catastrophic situations. It allows you to not just expand insurance coverage, which that in itself will reduce the protection gap, but allows you to lower the cost and take some of those savings and actually address the common peril that you're trying to protect communities from. So it's a very powerful tool. I'd like to end though in picking up on Dominic's challenge. I take it, looking back isn't always bad. So a quick historical anecdote. When electricity was rolled out at the World's Fair in 1892, the insurance industry sent some risk engineers out before the button was hit. And as you can imagine, there was some real concern about this live wire that sparked going into wooden homes and factories. What the insurance industry did in the 1890s, so they did not view electricity as a pricing challenge. It was not purely about how can we transfer the risk around fire. The issue became a safety issue. So they created something called Underwriters Laboratory, which became kind of that safety monitor of electrical appliances. And I would argue that the insurance industry, by doing so, made the world safe for electricity. Pretty cool, pretty big, right? So it's not always, I would challenge one thing Dominic said, and that is, it's not always risk transfer. We have other ways to help society cope with exposures by delivering our risk signals and our data in a different way than just price, right? And that would be what I would hope we would learn from all this as well.
Good transition, Francis, to a question for Gordon. And clearly data are always referred as one of the main roadblocks. And we heard a lot, how can we share more data? So how do you believe this can be overcome?
What a great question. And yeah, following on after Francis and Dominic is quite tough, because I think, you know, in many ways, I'd want to build off what they say to lead into this. I mean, in the first instance, I agree with Dominic on the basis of, you know, he talked about enabler or disabler with the insurance market. I think there are some things that we do want to disable and discourage, and that needs to be in there. But I do think there is this enabler piece that's important. And I also think, you know, in terms of the risks we're now looking at and the way we're looking at it, we just need to turn our heads on their side somewhat, because actually a lot of these risks are risks that we've had historically. We just need to consider them differently. When you think of carbon capture, for example, we were extracting through wells and pipelines and back and separating. We're doing just the reverse now with carbon capture, but we somehow can't seem to quite transition our minds to that, and we need to adapt and think about it differently. But I do think with regards to the roadblocks on data, there's a few things. I mean, I think the first one is that data is seen as, you know, some sort of IP, intellectual property here, and there's value in the data, and of course there is. But in this sense, to get to the greater goal, we have to have more sharing. We have to be prepared to share, you know, whether it's the, you know, as Francis was talking about, creating collaborative test beds for information and information sharing and better understanding, because the insurance market works off risk management, understanding, knowledge, and data is king. If we can share more data, then the transition of that to value in terms of the insurance market becomes tenfold, whatever, from the actual data value itself is significant. So I think that's one piece. Of course, we do have to be careful thinking about customers' data directly, you know, and again, that property of, you know, and privacy agreements and all of these types of things. It is a very thin line when it comes to, you know, the ethical caretaker of data, and then applying that to where we're trying to get to. But, you know, overall for society and what we're trying to do, there is a key piece here about the value, I think, outweighs the risk if we are prudent and careful about this. And as I say, you know, there is not a lot of new technology out there, really. It just needs to be thought about slightly differently. And if we apply a different mindset to it, I think we can probably accelerate this and use maybe some existing data and apply it in a slightly different way to get us where we need to get to and get people comfortable.
Thank you, Gordon. And Peter, how can the market improve the use of insurance to increase resilience?
A very good question. I mean, I think we've covered some of that. I particularly agree with Francis around, I think it'll be driven by a sort of amalgamation of risk management techniques and products. So, you know, whether it's how you insure, you know, offshore or carbon capture, or whether the use of parametric insurance in other sectors, you know, particularly we've seen it in the sort of, you know, windstorm cover in the US. So I think creating that sort of product set aligned to much greater and proactive risk management, I think, is part of it. I think the second is around white space. So we've talked a bit about green infrastructure and the ability to move from a sort of product to a more sector perspective. I think there are sort of broader white spaces in areas such as cyber and D&O and PI, which, you know, there are opportunities to expand into. And I think the point around aligning sort of self-insurance and the use of captives is almost like a backstop, maybe aligned to the public-private partnership as well, starts to create that sort of greater resilience. I think, though, the point that most attracts me is that, you know, building infrastructure is only one aspect of resilience. It's how you actually change and adapt, which actually drives that level of resilience. So I think, you know, an increase perhaps in flexibility around product, data and information and the offerings, I think, is going to be important to enable that quick reaction to some of the events that we're seeing over the next sort of 10 years.
Thank you, Peter. And Dominic, I mentioned earlier that one of the roadblocks for innovation is, you know, how do you price your products? How do you continue to be profitable? So how do you manage the risk return profile of these new products?
I think the simple answer is with great difficulty. It is a catch-22 for us as an industry. You know, any form of innovation, any new product, almost by definition, you don't have a broad base, you don't have diversification, you have high volatility as a result. And if you couple that with that unknown quantum about what actually the risk is, and you haven't perhaps got the appropriate data or expertise to assess it, it drives the price high. And at times it drives it too high. And that is a dilemma, because there's not, until you hit cruising speed on a new product and you get volume and premium and you get data and you get historical data, that's when perhaps you can bring the price down. But it is a catch-22. There's not an easy answer there. You know, I can demonstrate this in terms of, you know, pre the pandemic, you know, there were insurance products out there for pandemic cover, but the pricing was too high. And I think back then people thought this will never happen to us type attitude. So there's also that too in the background, that people were not actually getting enough product to market. So to measure the return is very difficult. And I think the insurance industry, rightly or wrongly, you can argue both ways depending which side of the fence you are, tends to price innovation too high. Mm-hmm. And as a result, it stymies appropriate growth and development.
Thank you. Interesting comments, Dominic. Thank you for that. Nick, so last question for you. From the perspective of a life and health insurer operating in emerging markets, as you mentioned, what are your priorities post-COP27 to support the customers you serve, build resilience in communities, and ultimately support countries on their economic transition?
It's really clear, yeah, that all our stakeholders are placing more and more value on sustainability, on social responsibility. That's true whether, you know, it's our customers, it's our staff, it's the board, it's the government, it's the regulators of all the countries we operate in, it's the banks, it's our other partners, it's the technology companies we work with. They're all placing a premium on sustainability, and that gives us more and more freedom, I guess, a license to innovate and respond. But we have to remember that helping provide financial resilience in moments of stress is really what insurers have been doing all their lives. And Prudentials has been doing that next year for 175 years. You know, we provide families with resilience, that supports societal resilience, and that in turn helps the government achieve their aims as they put in place more resilient infrastructure. And we have a special role to participate in local capital markets because we're a long-term partner and investor, and we mobilise people's savings. What I saw at COP27 was a specific ask to insurers to help countries make structural reforms necessary to help them achieve their net zero transition targets, and at the same time, particularly in the markets we operate in, also meet their wider sustainable development goal promises to populations. And we'll continue to work with governments and regulators in all the markets we operate in to achieve that. Last month, Prudential brought out a white paper, which you can find on our website, looking at a just and inclusive transition for emerging markets, very important to us given our operating footprint. Number of key themes in that are very pertinent post-COP. The need for just transition, not just for parts of the economy, but for the whole economy, the importance of closing the climate finance gap, the importance of bringing regulators along with us, of bringing customers along with us on this journey, and, you know, working to implement blended finance solutions to de-risk assets so conservative insurance companies can invest in them, and, you know, helping to deepen and strengthen the capital markets that will fund the carbon transition in emerging financial centres like Jakarta, Nairobi, Lagos. All of them need to be deeper to fund the carbon transition. That would be the points that I'd make. Thank you very much, Isabel.
Nick, thank you very much. We have 5 minutes left, and reflecting on everything you said, I think there is a recognition that the industry has a very significant role to play. But today, there are a lot of roadblocks. Dominic, you mentioned that you feel you are disabled in a way by activists, etc., by pressure. I wonder whether, and I feel some frustration from some of you on, you know, why don't we go faster? I wonder whether there is a need to have a more sector coordinated response, or or pressure on governments, or whether also the insurance industry should work jointly with the energy industry, for example, to find or propose solutions to governments. So in 1 minute, less for each of you, what do you think we should do more? What the industry should do more to be to act more broadly on this topic? I don't know, Peter, I see you first on my screen.
Thanks, Isabel. Yeah, I think that, the insurance sector is uniquely placed because it just holds, I mentioned before, I think it holds so much data, from the its historical cat risks, etc. That I think utilizing that data, layering it with, I guess other sources of insights is going to be critically important. I just think that is a huge asset that the insurers can bring to bear and work with other parts of the economy to really drive home the benefits and meet some of the challenges that we've discussed this afternoon.
Thank you. Dominique?
I think it's on a similar theme. I think it's collaboration. I think it's talking, it's sharing information, it's sharing experience, particularly in these early days. We have a social duty, if you like, to do just that. This issue is a threat to the globe, and I think we need to transcend just simple business rationale and move into a more collaborative position on it as an insurance industry.
Thank you. Gordon, from the energy perspective, how do you see better collaboration potentially in the future?
Yeah, I mean, I think the most encouraging thing for me on this, Isabel, is just the energy, the desire on the call and amongst all parties to make a difference for society, for the planet, and we're in amongst that as well. I think the piece is who will facilitate, who will pool together, and I think, to Peter's point, I think the insurance market is uniquely positioned to be able to bring the parties together and to have that collaborative conversation and that sharing conversation that then builds the products and builds the marketplace to let us go forward powerfully and feel protected in doing so.
Thank you. Francis?
Well, I'd start by saying I agree with everything that's been said, but maybe we can learn a lesson from COVID and pandemic here. The insurance industry went around with its data and its analytics and made the case that pandemics were essentially uninsured. Nothing came of that, and we kind of stood back and made sure it wasn't on our balance sheets in a very responsible fashion. But we got to make sure that doesn't happen with climate, right? We can't kind of just raise a flag and say it's someone else's issue, which we did with pandemic. And I think that that's an important lesson for us to learn, that we need to go beyond just the language and the awareness, and actually, to Gordon's point, I think it was, get into the solution work as well. And I think that's something that is going to be new for us, because I think it's going to require collaborations and partnerships like we've never had before. And I think that's going to be the pathway here, because this game is a team sport. It is certainly not an individual sport, and whether it's the energy sector or the real estate sector or any others, the insurance industry really needs to bear down and really identify the partners it's going to need to work with to make change.
Thank you. Nick, last few words on that?
Yeah, for me, everything's about scale. Yeah, we haven't got many years left if we're going to meet our 2050 targets. We've talked about lots of examples that we have of special or innovative financing. We just have to make this normal. It has to be standard. It has to be something that happens by default, and it has to happen everywhere as quickly as possible. So for me, everything's about making it bigger, scaling up, and reaching a size that will make a difference to the planet. Thank you.
Thank you, Nick. So good conclusion. Let's act bolder, faster on this topic, and together. I think that's what I take away. Thank you all. It was a very interesting discussion. Thank you, IIF, for hosting this panel. And I'm sure we will have a lot of discussion on this topic going forward. Thank you all.